Timings are probably the most important thing to me, second to high and low of the day. You're going to see lots of trade setups outside of these timing windows, and some of them will actually be good opportunities for traders. My main focus is to focus on the 12 candle window. When I say 12 candle window, I'm referring to the 15-minute charts. All times that I talk about are New York Eastern Standard Times. So wherever you're at in the world, Google World Clock, punch in where you're at, or punch in New York time, and then configure yourself to those timings. 8 to 11 p.m. for Asia, 2 to 5 a.m. for London, 8 to 11 a.m. for New York. I mainly focus on the high and the low during that 12 candle window. If I am not at the high and the low, in that first hour, I'm looking for the market to break one of those levels. Because again, coming back to our premise, I know there are stops above and below those levels. My next main focus is the equity hour, when the equity markets are opening. Now, I know people will send me emails about what time they think the market opens or what time they've read the markets open. I'm just telling you the times that I focus on, and this is after thousands of hours of experience of being at the screen, specifically focusing on these times and looking for only certain trade setups that I can scale up in size off the numbers at the high and the low of the day and the high and the low of the week. These are the opportune times for me to come back to the screen. Some of the pairs may have moved or some might be doing different things, but I'll always find one or two that give me my ideal setup in this 12 candle window, and specifically when the equity markets open, because again, in that equity hour, there will often be either the trap or the trade. So if the market has already hit one of the highs or lows, I'm looking for the trade opportunity in that equity hour. If the market has yet to hit the stops, then potentially the equity marketing opens could be taking them that little bit further into the extreme, getting traders to chase that move in the wrong direction before engulfing and shifting the market and moving it very quickly back the other way. So timings are important. For me, that allows me to be off the screen. I can have trade opportunities or not see any trade opportunities and know that I can come back for the next session looking for very specific things involving, again, the high and the low of the day or the high and low of the previous session for those opportunities to present. So again, 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m., New York Eastern Standard Time. And again, that middle hour being the equities hour that I specifically focus on. We'll look at some chart examples over the course of the week where you'll be able to identify and spot that usually one or both, two of the three sessions will have either formed the high and the low of the day, or we'll see a stop hunt from one side to the other, making that in the US session potentially, or sometimes in London, where the market has put in a high and a low all in one session. But that main 3-hour window is critical because that allows me to focus on the most opportune times of when they may potentially be locking in a high or locking in a low of the day. So let's take a look at some of those examples now.
Good day, traders. Stacy Burke from Stacy Burke Trading, continuing our discussion on the 12 candle window. We started with structure and the pattern, and then we talked about the high and the low of the day. Today we're going to be talking about the timings, and just to rehash, the 12 candle window is the window that I focus on, and the reason why I focus on this window, this allows me to have a laser-like focus for some simple recurring setups that will occur either in the session itself, whether it's in London at a peak formation high or low of the week, or if it's a reversal trade after a stop hunt, 25 to 50 pips outside of the Asian range, or if it's a three-peak pattern inside of the high and low of the week, where we may have Asia, London, and New York culminating in a sell high setup at the beginning of New York, or a buy low setup at the beginning of New York that potentially sometimes can occur in the gap times. But that being the case, that also reinforces not to counter-trend the peak formation. So if there's a new high or a new low of the day in place just prior to the New York session beginning, I do not counter-trend that move. If that move has already been locked in for the high of the day or the low of the day, when the 12 candle window starts in the US session, if I get a pin hammer to continue that move, I will do so, but I will not counter-trend the peak formation. But primarily I'm looking for those setups to occur in this 12 candle window, 8 to 11 p.m. New York Eastern Standard Time for Asia, 2 to 5 a.m. New York Eastern Standard Time for Europe and London, and 8 to 11 a.m. New York Eastern Standard Time for the New York session. And the hour in between that 3-hour window is the equity hour to me. Now, I know people send me emails and say that the equity markets don't open until this time or they open at that time. This is the 3-hour window that I look at on the 15-minute charts. The equity hour to me is the middle hour, so I'm 1 hour prior, 1 hour after for a setup to occur, and I am looking for an opportunity to either position myself in a continuation of an existing trend or to be selling high or buying low at the high peak formation of a day or a week. That allows me to keep my trading time to a controlled time frame. It allows me to stick to certain high priority, high best possibility, best playbook type setups based on when the equity markets open. And as we'll see as we go through the charts, that in a high percentage of time, the high or low of the day will occur in one of those session 12 candle windows. And then sometimes we may have a complete move from one side to the other in one session itself. That can be London, that can be New York, but we'll go through that. Again, this is about creating reproducible, duplicatable trading habits for myself, focusing on the highest, best trade candidates that allow me the best risk reward, and again, putting the pieces together of structure, high and low of the day, the timings, the round numbers, and then the behavior of price, which we're going to go into in detail in the next few videos, around targeting certain setups that show up frequently over and over again that allow me to stick to 2 or 3 high probability setups. Now, we talked about just the basic template of an up template and a down template. This could be a Monday, Tuesday, Wednesday, Thursday, Friday. This could be a Friday, Monday, Tuesday, Wednesday, Thursday, that sort of scenario. In terms of timings, we talked about examples of highs and lows and the different variations of M's and W's. We talked about, again, an example of a downward template and how the structure will develop, but the timings are critical. We talk about the different variations of the M's and W's that will occur and how Asia is often the accumulation phase. So if we look at a basic Forex master pattern, this is typical for most markets. We'll see that contraction phase usually occur through the close of the US session into Asia. And sometimes at the end of the 3-hour window, and the next 3-hour window, we'll get an expansion phase that can also occur into the Europe-London Open, where they expand it up top, expand it down low before trending that market, and then heading back into consolidation. Just an example again of the similar variation of the Wyckoff cycle or market maker cycle, whatever people want to call it. We have the accumulation phase, the markup phase, the distribution phase, and the markdown phase. We can look at an example of that on most charts. We'll see where the Asian session put a high of the day in place and went into consolidation. They hit the high side, they hit the low side for expanding the range up top, expanding the range down low, but the high of the day for that session was put in place in Asia. Then the market in the London session hit the high, they hit the low, but both the London session is inside of the high and low of the Asian session before pulling back into consolidation, engulfing and pin hammer, and then heading into the US session, expanding and continuing that trend. So timings are key for a lot of different variations of these patterns. We can see a similar variation of Asia putting a high and low in place in that 3-hour window, and then heading into the Europe-London Open, they expand the range and they work the top before engulfing, putting a high of the day in place and extending that move down 25 and 50 pips from the high of the day, going into consolidation at the numbers and heading sideways, and then heading back up towards the high of the London session. So we had Asia, the market has worked the high of the day, putting a high of the day in place in the 12 candle window, going down 75 pips, 3 levels of drop before having an extended W formation at the end of the 12 candle window to put a low of the day in place, and then heading back up to the high of the day in our 12 candle window, locking in the high 25 pips above the Asian range and engulfing and pulling back into consolidation. So an example of the 3 sessions expanding the range over the course of the day, but putting a low of the day in place in London and a high of the day in place in the US session. We can look at any instrument, but again, keeping the template in mind as a new week begins and our relationship to the previous day's highs and lows. As the new day unfolds, each 12 candle window allows us to make a thesis based on how the day begins to trade, whether or not they put a high or a low peak formation in place, and whether or not they are working higher or lower as the next 12 candle window opens. The timings are critical because this allows us to either participate in continuing with an existing trend, the market breaks previous day's high, pulls back, breaks higher, putting a low of the day in place in that new break, and then a high of the day, pulling back and extending the high, working the high, working the high, working the high, pulling back and continuing that trend. So London, as this market continues to trade, we can ascertain that London now is potentially in the middle of the low of the day or the Asian session, and that the US session will potentially be putting the high of the day in place. And again, the timings are critical. So traders that enter prior to the market thinking that this 3-pin pattern at the high is the high of the day and they short this market, only to find that once the US 12 candle window and the equities market opens, they put a W formation in place as they hit the low a second time to hit the stops at the high of the day, which was a trap prior to the 12 candle window, before finally reversing and engulfing all of the US session volume and taking out the stops from the London session. So again, timings are critical for me. It allows me to stay off the charts, knowing that the market is potentially going to come back and either hit stops or lock in a level for a reversal, for a stop hunt. We'll look at some specific examples, but each day as the market pulls back into consolidation and the next 12 candle window starts, we can look to see if a peak formation has been put into place. We know there's stops above and below the highs and lows that form. And then the market will go back to our master pattern thesis where they expand the range, they expand the range, they come back to the high a second time on a 1 push, 2 push, 3 push pattern to engulf it for a sell back down outside of our 12 candle window. But we talked about the 3 things that markets do. They break out, they pull back, and they continue for a trend trade, as we saw on the previous day's session. They break out, pull back, and continue the move, or they break out and they pull back and they reverse for false break reversals, or they break out and they pull back and they go into a trading range. So we're not specifically focused on anything on this particular section about highs and lows or structure. We're just specifically talking about timings and recognizing that the first hour will often be the stop hunt in that 12 candle window. So we can look in any session, and we're going to talk later about peak formations in Asia and London and New York to recognize certain types of scenarios. But more importantly, that first hour will often trigger stops on either side, expanding the range or hitting stops in an existing trend if it's already in place, before potentially locking that in and shifting in the equities hour, or vice versa. If they have not hit the stops, the equities hour may be the final blow in hitting stops before the market shifts away. So we see an example again of the market taking out the previous day's high before pulling back. We're not even talking about numbers in this section, which we're going to talk about in the next video, but recognizing specifically the timings. They put a high of the day in place, they come back and hit it again. The market fails to follow through and extends the high as we head into the next 12 candle window. The market moves higher in the Europe-London first hour. The equities hour breaks out and consolidates at the high and breaks higher at the end of our 12 candle window before pulling back just prior to the US session, giving us a pin hammer and an engulfment heading into the US session. So we have now a breakout pullback continuation heading into the US session 12 candle window. So again, looking at this chart and saying Asia potentially may be the low of the day, London is in the middle, therefore the US session will possibly be a continuation and either lock in a high of the day or continue the move and into the next day's session. Each 12 candle window has variations, and again that comes back to our template and where we're at in the week. We could be at the high of the week, the low of the week, we could be in the middle of the week. But again, important understanding when we come to our 12 candle window, are we putting peak formations in up high for sells or down low for buys? Are we hitting any stops from previous profitable trades? Or again, are we just putting highs and lows in place for the next 12 candle window session? In this particular example, the market pulls back, works the low, pulls back, works the low a third time before heading into our 12 candle window and hitting the stops, coming back down to the low of the day, hitting the stops. So again, we talked about that master pattern, accumulation, expansion, pullback, and then the trend trade for the move back down through the low of the day. We head into our next 12 candle window, that first hour, stop hunts with the 1, 2, 3 pattern, similar to what we saw in the Europe-London 12 candle window. Back into the existing downward trend. We have an anchor point low. The market engulfs, gives the pin doji, which is the retest on traders that have gotten the trade right for the continuation down through the low of the day. So again, looking at the sessions and saying Asia and London are basically trading inside of their own highs and lows. We think master pattern, range expansion, trend trade. The US session is below the opening range. The market stop hunts back into the existing trend, locking in the high of the session on a 1, 2, 3 engulfment pin hammer at the numbers for the continuation of the move down. Now, obviously, just come back to timings. Traders can be trading in all these other areas, of course. But in terms of reproducing a specific timing, looking at behaviors, price, time, structure, round numbers to keep our window tight and reproducible. The 12 candle window allows me to do that. The equities markets, when they open, are typically when we will see some of the best trade opportunities present. And again, another example, next day, the market breaks through the previous day's low, giving us a high of the day in Asia. Then the market pulls back at the end of our 12 candle window, giving us our low of the day. The market expands the range, goes into consolidation, extends down lower with 2 pin bars into the equities hour open, where we get the 1, 2, 3 stop hunting traders who potentially were short at the beginning of the Europe session. The market comes down again, 1, 2, 3, so a 1, 2, 3 up and a 1, 2, 3 down when we get our engulfment at the end of the 12 candle window. So again, just coming back to some logic, Asia has put a high and a low in place. Europe and London break through the low of the day, pull back and hit it a second time for our engulfment and pin on our left side. And we have a middle structure now for our W formation. So now we can hypothesize that we potentially are now locking in the low of the day and possibly the low of the week in this particular case. And the market trades back through the high of the day on a 1, 2, 3 pullback and a continuation up 25 pips above the Asian range. So again, 25 below the Asian range, 25 above the Asian range. The market goes into consolidation, heading into our 12 candle window. We get an engulfment pin hammer inside of a 3-bar consolidation, and then a break of the high bull for a 1, 2, 3 down. Stop hunting traders at our peak formation low. So some traders may look at this and say, well, that's the high of the day. But this equity hour open is a stop hunt to the low of the day, where we get our 3-bar engulfment pin hammer for a reversal for the long trade into the peak formation low of the day, back up through the high of the day for a measured move. So again, this first hour culminated in a blow-off stop hunt. The equities hour reversed with an engulfment and pin hammer after stop hunting into the peak formation low, and then aggressively moved back fast through the high of the day. We have our Asian session 12 candle window. No peak formation really put in place. We have a low of the day, and the market continues to work higher in that gap 3-hour window, pulling back in the Europe session at the open of the 12 candle window, hitting the round numbers before pulling back in that first hour, consolidating at the low of the high bull candle. So we've pushed higher, consolidated, pushed higher, consolidated, pushed it a third time. We get an engulfment of the high bull in the open of the London hour for a move down, and then a pullback and a pin hammer into the high bull. So again, we're working the high. The low is down here. We're working into the high of the day at the 12 candle window at the high of the week. So again, the Asian range is a consolidation. The market works up, pulls back, works up, pulls back, gives us our M formation, but also just again the logic at the high of the week that London potentially may now be locking in the high of the day. The market trades through the swing low, through the low of the day, goes into consolidation at round numbers to continue the move. As we head down into the US session, the market gives us a, we'll remove that, gives us a low of the day in that first hour, the blow off, and then pulls back in the equities hour, hits it a second time, extending the low. So again, coming back to our simple premise of range expansion, range contraction, they hit it a third time, pull back at the numbers with a bullpin hammer, with a 1, 2, 3 in a strong down move to the round numbers, and then back 1, 2, 3 before consolidating into the close, not only for the session but for the week. So again, traders that were long, possibly off the low of the day, expecting at least a move possibly back to the high of the US session. We don't really have a middle structure for a W formation, but we have 3 pushes into the low, pulls back into consolidation, and closes into the end of the week. As we head into our Monday, we have our peak formations from the US session. And as our 12 candle of window Asia opens, that market trades sideways in a 25 pip consolidation, giving us a high of the day and a low of the day as we head into our Europe-London 12 candle window. And again, we see the master pattern where they expand the range up top, pull it back, and hit the lower boundary before engulfing, consolidating, and continuing that move up through the high of the day, and then working up into a peak formation pin hammer at the first hour of the US session 12 candle window. So again, just coming back to our simple premise, consolidation, range expansion, trending higher, going into our consolidation at the US session 12 candle window underneath the round numbers with a pin hammer to the high, dropping down, taking out the high bull, going into consolidation and reversing back through the low of the day. So again, just revisiting our Wyckoff accumulation distribution phase pattern. These timings are critical for us to recognize potentially where peak formation, low of the day or high of the days may be put in place, and the opposite for a downward reversal. And again, just going day to day, we have our lows and highs in terms of our structure heading into the next day's session. We talked about our rectangles and our breakout pullbacks. We can see that in the Asian session, the market has put a peak formation low in place once this breakout has occurred. We're going to talk more about those in future videos. But again, once this market has broken higher and extended that range out before pulling back, we redraw our highs and lows as we head into each 12 candle session window. The market in the Europe first hour stop hunts down back into the existing breakout long before pulling back, giving us a redrawn low of the day. The market then comes down a second time, giving us a redrawn high of the day. The market pulls back and hits it a third time into the existing breakout before shifting back up and breaking through the high of the day. So again, the question we want to ask ourselves, now that this market has potentially gone higher, if they were not participating in this existing breakout pullback continuation, is that the US session has a high probability of either extending that move out or putting a high of the day in place. The first hour of the US session is a 1, 2, 3 back down to the existing breakout move from the London session before we get our pin hammer engulfment for a blow off move through the high of the day. So if traders were in this trade long and they were holding on to this, they'd be at break even at the break of the high and the round numbers and the previous day's high. When the market pulled back, pinned underneath of the previous day's high and the round numbers and pulled back, we'd be thinking consolidation. Point being though, the low of the day was put in Asia, peak formation low, continuation in London, so it's the middle of the move, peak formation high in the US session 12 candle window. Head into our next day, again, a peak formation high, a peak formation low. We have our previous day's high and low from from our 12 candle window. The market, again in the master pattern, expands the range up top, hitting it 3 times before breaking down in our US session 12 candle window. So again, the London session expands the range of the Asia high low before hitting the low in our 12 candle US session first hour. Inside bar engulfment in the equities hour for a break through the high of the day for our 50 pip move plus up through the high of the day. So again, just revisiting the master pattern and understanding that these behaviors happen over and over again, and that the timings are very specific in many cases to the 12 candle window. Yes, there are going to be trades that happen outside of the 12 candle window. And sometimes I'm going to be at the screen when they happen. I'm going to see them setting up. But I know that I'm going to get a trade in one of those sessions that matches my best playbook setups. And I'm not trying to trade every swing, but I'm using the timings to duplicate my behavior and matching it with the highest probability times of when these markets are going to move. You know, we could look at gold. We can look at any market, and we'll probably be able to see the same behaviors, whatever instrument that you do trade. Just study its behavior. Now, currencies, to me, match this behavior very, very particularly. Markets like gold, where they have multiple large players, as opposed to a lot of the institutions and central banks that are involved in the currency markets. Gold attracts a lot of other big players, so it's harder for them to manipulate it in terms of certain behaviors. But timings wise, Asia, London, New York, those are the 3 main specific areas of when these markets will move, because that's when these markets are heavily traded in terms of the physical markets, and that's when we're probably going to see the biggest swings in price. So again, coming back to just some simple concepts of looking for highs and lows being in place, if those markets are just in a consolidation and then a range expansion, or if we see the markets break to one side and work off the numbers, work into one side, work into one side, work into one side, and then shift away, retest it, and again work back in one direction, and then be able to look at each time frame in terms of that 12 candle window for certain types of behaviors that can give us an indication that a peak formation, low or high, may be in place, not only for the session but potentially for the day. And as that day unfolds over the longer time frame, obviously we may be working up into one side, working the high, working the high, working the high for a move back down, not only through the low of the day, but possibly a peak formation low. So again, that first hour will often be the stop, hunt, and trap, taking traders into the extreme. In some cases, the equities hour may be the second tap at that level before reversing and engulfing and shifting the market back to the opposite extreme. So again, gold, like any other market, may trade heavier as the day unfolds, but again, each week the template, the sessions may vary. We'll look for that 12 candle window to help us identify when a peak formation low or high is in place, or if indeed we are in the middle of a move and we're looking for a continuation trade. Looking at the Canadian dollar, and again, we're going to be going over best trade setup scenarios, but in this particular section, just again, specifically addressing the timings. Asia putting in a high of the day. The market works its way down into the Europe-London 12 candle window with no low of the day in place until the middle of our 12 candle window. The market then breaks through that and gives us a new low of the day. So we've extended the range down. before pulling back and then hitting it a third time just prior to the US session 12 candle window. And then we get our 1, 2, 3 in that first hour, a bull pin against the trend, and then an engulfment of the 3 lower bear candles in that first hour of the US session 12 candle window for a very fast, strong move, stop hunt back through not only the highs of London, but the highs of into the Asian session shorts. Point I'm making, Asia put the high of the day in place. They extended the range down below the round numbers, pulled it back, continued to extend the day lower, putting in a peak formation low in the US session 12 candle window after the stop hunt on a 1, 2, 3 on the third leg. That's a 33 reversal for the move back up stop hunting traders in Asia. So creeping trend down. And again, this to me is a best trade setup where they extend the range, they pull it back, they extend the range, they pull it back. They hit it a third time on a 1, 2, 3, 1, 2, 3. Engulf it in the first hour of the US session for the fast move back up through the high of the day. We head into our Monday. The Asian session immediately puts a 1, 2, 3 peak formation high in place in our 12 candle window. So again, high of the day. As this session evolves, we head into our Europe-London 12 candle window with a low of the day and a high of the day in place. The market in that first hour heads back up towards the Asian session high before reversing, hitting stops on traders that have gone to break even, but not taking out the peak formation high. It then proceeds to break the low of the day and go into consolidation before giving a pin hammer underneath of the round numbers, extending that range down through Friday's low of the day before pulling back and giving us our first low of the day. So again, Asia potentially, as this day is unfolding, we can say to ourselves, London has opened up inside of the Asian range. Asia's put the high of the day in place. There's a high probability that the US session will now lock in the low of the day. We get our low of the day. The market works at 1 push, 2 pushes, 3 pushes before pulling back and going into consolidation. High of the day in Asia, low of the day in the US session. The low of the day was put in place in our end of our 12 candle window. They worked it in 3 pushes before pulling back and going into consolidation. The next day, we get a high of the day put in place prior to our 12 candle window. The market pulls back at the end of our Asian 3-hour window. They extend the range lower before pulling back, hitting it a second time in the Europe-London 12 candle window. So again, we're down low, the low of the week, low of the month. This is a classic scenario of where we will see traders getting caught on a sell signal down low. But again, just specifically talking about timings, the market comes back with a 1 push, 2 pushes, 3 pushes into the sell candle of the London hour before engulfing on the third push to the low of the day just prior to our US session 12 candle window. In our US session 12 candle window, they immediately break through the high. So I talked about an existing trade potentially being in place. So some traders have said to me, well, if I see it go to the low of the day, I'm going to trade it. No problem. I'm referring specifically to coming to the screen at certain times. And now we have the peak formation in place. We're in an existing long trade. We will only trade in the direction of the trend. We get our pin hammer in our equities hour to trade in continuation with our existing peak formation low off the low of the day on our W formation on our third push to the low of the day. So we had our first push, second push, and our third push on a 1, 2, 3 again, recognizing the 1, 2, 3 on a final stop hunt, and then the move back through the high of the day before putting a peak formation high in place. So again, this is our high of the day, but then the market proceeds back, working into the high of the day before pulling back into consolidation. So some traders have shorted this potentially. Market goes into consolidation. They can't figure out why it's working it again. The market has only put a high of the day in place. It does not mean that it will not come back and work it for one push, two push, three pushes, or whatever that may be. But again, coming to the screen in our 12 candle window, we now look at this and say London has put our low of the day in place. Asia has our high of the day. The market will trade or should trade back through the high of the day or hit stops before pulling back or break through. And again, 25 pips above the Asian range for our 3 levels of rise before pulling back into consolidation. Although this market returned and re-hit it again, traders who are looking to lock in their 50 pips had that opportunity. So hopefully you got some value from today's video, traders. The timings allow me to reproduce my behavior in terms of coming to the screen at set times. High probability of the high or low being put in place at one of these extremes, specifically London, New York. And again, we'll go into more detail with recognizing peak formations in the 3 sessions and where we're at in that overall weekly template. Keep it simple, traders. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.